Hey everyone, Nick Shaheen here, looking at Zoom video. Man, these videos are getting interesting. Maybe I should charge for them. Hurry up and sub to the channel. At the end there'll be one before it becomes a paid channel. Anyway, so Wild Stock, and it's a company that is in the news for a lot of reasons. It's one of the ones that are, quote, benefiting from, not maliciously, from the coronavirus effect. Because we're all locked down, I personally had a party over Zoom for somebody's birthday we were all over the world. So we had a party for them. And it was pretty funny and pretty effective. So people are using it now. Okay, it's temporary, but some habits are going to develop going forward. Something happened in the news this week, some sort of they got penalized by Musk and somebody else that they can't be in our program because some privacy issues. Yeah, privacy. And nothing is private, people. So forget about it. Unless they're malicious about it, which I doubt, then this too shall pass. So the other day it fell apart, and I said to friends, it's buyable. It's becoming interesting. So I wasn't immediately, that was like a flash low, and then immediately after I said that, boom, they made a ton of money. So it went $10 from the low to the, actually more, so $15. And that doesn't mean buy forever. It just means that this was an opportunity to go along. So I said literally in the chat room, which, by the way, the link for the chat room is down in the description. I'm not allowed to put the links in the videos yet. Soon. So the idea is, if you wanted to be long Zoom and you missed that madness on the virus, then this was an opportunity because it came back to the starting point. So somebody that loved it and felt FOMO, oh my God, there was your chance, and they took it. So this was a well-consolidated zone. So we're going to talk right now, and I'm just going to give you my opinion of this company. I don't know how they make money. I use them. I don't pay them a penny. So, and I use them extensively. In fact, the chat room is hosted on Slack. So, and it's free to me. It has limitations, but I can live with them. So this is the part where the chart comes into play. This is a 60-minute chart. So every candle is 1 hour. So it's a good amount of days. So it starts in February, it spills to now. So a couple months, let's say. This was a good battle. So this is what they call consolidation. Plus the volume profile tells me that it has support from one line specifically, but it's actually a zone. 3 lines here, from here to here. The volume profile on the left tells me that it should find buyers. Whoever missed it, they're going to buy it. Whoever bought it, they're going to rebuy it because they probably booked it. Okay, so we saw this coming. Anybody saw this coming if they tracked it on the short term. See these 2 red lines right there? I didn't know which way it was going to go. All right, so somebody said, what do you think of Zoom? I said, well, it's probably going to fill the gap, but look at the range. And I said, I'll probably look at that candle right there. It seemed interesting, the edges of it. So I said, if this is lost, this is what it's going to do. If this is gained, this is what it was going to do. So they lost it, boom, and they over-delivered. So I underestimated. I thought it would stop here because of this cluster, and that top, but they overshot. But guess where they're at? To the cluster, to the top. Not a coincidence that they stall here. Now they're going to stall into this part right here, the top of this candle. So as it rallies from here to 133.5, I'll probably get out if I'm trading. So if I bought it here, that's where I would get out. And then I would rebuy it higher, but for technical purposes. Now, if I'm buying it for the long term, kudos. I got in at a good price. I'm not recommending it. I'm just sharing my opinion. So I'm going to zoom out to a daily, which is what most people look at. This is a year's worth of data and daily. Has it been out for a year? Yeah. So these are the same levels. This is the red line I drew. It's for not to get wonky. So now it tells me I visually can see the fact that there was a cutoff here. So there's a visual break here. And there's also some sort of a breakout. And now they're coming back and they're revisiting the neckline. Totally okay. So now does this look like halfway through of the rally? Pretty close, probably a little less than half. But where is that? I don't use it often, so I don't know where it lives. Fibonacci, there we go. I can eyeball it usually, and that's good enough for me. I use crayons. Look at that. Oh my gosh, okay. All right, this is the 50% line. Look at where it at. Look at where it bottomed. So what is that? Fibonacci says found ratios that exist over and over. To me, plain simple English, Fibonacci or not, it's okay for a rally to lose half of it. It's okay for a stock to lose half of the rally and not lose control. The buyers are still in control. Higher lows, they're just giving back half. What does that mean? Okay, so let's draw it out a little bit. Sorry about the noise behind me. I forgot to close my door. Everybody's at home. So eyeball, half. Totally okay to lose half. And look at this. This chunk right in the middle, that is a battle zone. So as you're falling into it, whoever fought it here, they're going to fight over it. So here, clearly, there are more sellers than buyers. Imbalance. It hits here, they're going to wake up, and it's going to come back into balance. Furthermore, right here is the line of the value area. So this is where all the action happened for this period of time. So as you come back into the value area, they broke out of it. They didn't have a chance to consolidate it enough to expand it higher, but they're coming back into the top end of it, so it should provide some support. All this is gibberish to a lot of people. I'm telling you something. This is not a place I would sell this stock. That's my opinion. If the country is going to recover, if we're going to open the doors again, this stock might have a little trouble. But I think if the markets are rallying and there's nothing to that lawsuit that's going to probably come from whatever things that is going on with issues, privacy issues, then this is a better buy here than a sell. I'm not long it, so I'm not talking my book. I may have suggested it here and there in other videos, but oh man, look at this. Okay, so major fail. This is daily. Let me go to a weekly. Will that be clearer for you guys and gals? All right, yeah, less noise. Take out all the drawings. No drawings. So this is 1 week. Pretty indecisive candle. They didn't know whether to love it. They didn't know whether to hate it. So they came back and closed it where it opened. And then the next week was disastrous. They recovered. They came back. Failed miserably. Look how long it took to come back. Fought over it again with this candle. This time they prevailed. Regardless of the reason. They ran up. They're coming back. They haven't even reached that level yet. So even if it falls to here, on the weekly, the buyers are still in charge. Did you hear that? Even if they fall down to here, on the weekly, the buyers are still in charge. That is my opinion. It's not fact. Even if it falls to 90, it would be a buying opportunity. So if I owned it and I didn't sell it yet, I don't panic out of it. If I want to protect myself, that's fine. I can do it via puts. It's pretty expensive these days. Maybe a put spreads to stop partial bleeding. And as far as where I would buy it, if I get lucky and anywhere here is a good buying opportunity. Therefore, now it becomes how can I use options to buy it here before it gets to here? Ooh, I'm going to open the door and then cut it short. If you want to learn more about it, you're going to have to come see me or talk to me. Reach out. I can use puts to get long a stock down here for free. Meaning, actually, let me rephrase that. I can get paid to get long the stock at this level, even if it's not here. Yep. Anyway, Nick signing out.